You ever make a payment of $600 or better, or get a payment Venmoed to you for $600 or better? Well, the IRS wants to know about that. The only question is why it wants to know about that. Hillary Vaughn following the developments on Capitol Hill. Hillary.
Neil, the idea behind this new rule is to catch people cheating on their taxes, making sure people are paying taxes on the income that they're making. But it doesn't put a bullseye on billionaires. Instead, it's a burden on small businesses, people that get paid by their customers and clients for goods and services through third-party apps like Zelle, PayPal, and Venmo. The new rule now says transactions in those apps over $600 for goods and services now have to be reported to the IRS. This hits people that use apps to run their business. Think hairstylists, housekeepers, those in the gig economy, small shops at trade shows. The National Federation of Independent Business telling me in a statement, this rule, when it was passed in March, was not really vetted. Quote, this requirement, which was added late to the American Rescue Plan Act without debate, is yet another burden that will occur while small businesses are facing numerous challenges, such as rising inflation, workforce shortages. Congress should focus on finding ways to help Main Street succeed instead of saddling them with these confusing requirements. This only applies to taxable income, not money that you're sending peer-to-peer that you may get from friends or family. But some people say this still exposes people to more IRS intrusion.
What if I send money through Zelle to my child at school? I'm now going to have to prove that that wasn't payment for some kind of service. With a broad stroke, you can catch up a lot of people doing things that have nothing to do with taxes.
Neil, technically this is not a new tax, but if you're reporting income that you didn't previously report paid through these apps, you could end up paying more in taxes, and it's one more thing that people need to worry about at tax time. Neil?
Thank you, Hillary, very much. It is a little weird. So two numbers guys looking at the numbers behind this, Jonas Max Ferris, David Bahnsen. David, I don't know. This just seems like a Trojan horse way to get some money. I could be wrong. What do you think?
Well, I mean, I think it might be worse than that, not just to get money, but to get information. But obviously the reporting you guys have is exactly right. Nobody in the right mind thinks the IRS is going to capture meaningful revenue by looking at what babysitters get paid and what college kids send to their buddies for beer money. I mean, this is absurd. The way to move the needle is in much larger measures. And of course, this does, as Senator Paul said, get away from a sort of innocent until proven guilty. It starts requiring people to validate things that are totally outside of the IRS's purview.
You know, Jonas, in a weird way, it's sort of like the alternative minimum tax to me. I know night and day comparison, but that started to sort of seek out the super rich who were not paying taxes, and it since grew to about half of all taxpayers, right? I don't know what it is now. What do you think of that?
It's a good analogy because of inflation. There are a lot of thresholds that the IRS doesn't adjust for inflation. The $600 number keeps coming up, actually. They use that for a lot of thresholds for, like, doing 1099 miscellaneous forms if you hire somebody. That used to be some pretty good money. Today, it's a pizza under the new inflation. Actually, the Obama, the net investment income, the 3.8% you have to pay, that has a $250,000 threshold. That's not inflation adjusted either, so that's capturing more people every year. That's not going to be a lot of money the way things are going right now. That all said, getting back to this issue, they already were doing this for $20,000 transactions, and it's a 1099K form. So it's not like they're gonna like go through all the pizza payment parties unless those add up to over $600. It used to have to add up to $20,000. Now there are bad actors out there who are probably stacking, were probably using 20 different accounts at booking $18,000 in revenue, and for all practical purposes it was cash. It's called a cash app. They were not booking this as income. However, to capture those people and bring it down to $600 like they do with credit card transactions means billions in this IRS collection is going to bring in hundreds and hundreds of thousands of people that are not profitable. I will assure you, as an investment advisor, most people selling $5,000 of junk paid $7,000 to make that $5,000 junk, or it's a car that depreciated. So it's a lot of paperwork that isn't going to lead to a lot of results. Again, in a world where there's a guy with a $5 billion Roth IRA and most billionaires just borrow against their unsold taxes, that's where the real tax money is. This is going to create, unfortunately, a lot of work for a lot of people who aren't the person who has 20 different Zelle accounts stacking money, really is earning $250,000 and not paying tax on it.
Right. Yeah, it is. And there is, to your point, John, it's a big difference between $20,000 and $600. But, David, it has already prompted me to change my mind about sending my son money at school, at college. So I said, you're on your own, pal. And I'm wondering if people are going to be very leery now of just typical transactions that they've had because the IRS might be looking over their shoulder.
Well, I think there is a school of thought there that some people will have greater paranoia, and a lot of it's justified, not because there will be scrutiny or people really getting upset about sending your kid money in college, but because there's no credibility. The public trust is not there. It goes back to a lot of the things with Lois Lerner and the Obama administration. Nobody believes the IRS is apolitical. Nobody should believe that. But I agree that in this particular case, the real issue is cost-benefits trade-off. Whatever they have to do by way of time, effort, resources, cost, if they find a few bad actors who are stacking, which I'm very skeptical that there's that many, but what they do collect in additional revenue to Treasury is going to be meaningfully less than what it costs to get it. What business would ever make that decision? So you have privacy concerns, constitutional concerns, public trust, all to end up losing money in the endeavor.
You do have to wonder where all this is going. Build Back Better and some of the means by which we're supposed to pay for that, it might never come to pass. But this thing is alive and well, Jonas. So there's a revenue raiser here. We just don't know to what degree, right?
Yeah, and there's a long history of trying to add something to bring in money when you're doing spending. In fact, a very similar thing was done in 2008 under Bush. They added it also to the housing bailout, which was very costly, which was the same thing for credit card transactions through PayPal and stuff. And the idea is, well, we're going to pay for some of this with some extra money from all these tax cheats. However, these plans don't bring in that much money from tax cheats. It still requires IT departments, databasing. There's no staff that's going to use this data to collect so many billions of untold money. If they were so good with database collection, to be honest, so many PPP loans wouldn't have gone out fraudulently because they would be like, well, you really didn't have 500 employees and $20 million in revenues like you claimed to have. They don't even have that data organized in a way to somehow catch that. So I highly doubt a lot of $700 transactions are going to lead to a wealth of data of collection. There are easier. Look, ultimately, all this spending is going to lead to higher taxes because these little methods are not going to bring in enough. If they want to capture small transactions, we're going to need a federal tax, a sales tax like a VAT. But this is never going to do it. The few bad actors are not going to bring enough to cover the interdiction costs of the thousands of small businesses that are actually not that profitable to start with.